Hey everyone, my name is Alex Morgan, and today we're taking an in-depth look at the silver market right now, with fresh, real-time data and real implications for traders, investors, and anyone watching precious metals. If you want deep analysis, live market context, and smart future projections, make sure you hit that subscribe button right now and turn on notifications, because the silver price action unfolding around the $78 per ounce level could tell us exactly where this market is headed next. Let's get into it. At the time of recording, the spot price for silver, the price at which the metal can be exchanged for immediate delivery, is trading in the upper 70s per ounce, around $77.90 to $78.70 at various live price feeds. That $78 region isn't just a random number. It's become a key psychological and technical zone for the silver market. Prices have hovered around this area recently, bouncing between roughly $76.03 on the lows to near $79.50 on the highs on intraday moves. So the first question we need to ask is, why is $78 such a critical price level? To answer that, we need to break down what's driving silver right now, both fundamentally and technically. Silver isn't just a metal used for jewelry and coins. It's a hybrid asset, straddling the worlds of both precious metal wealth storage and industrial demand. That dual role makes silver more volatile than gold over the short term. It reacts not just to macroeconomic forces, but also to shifts in industrial demand for electronics, solar energy, medical tech, and more. From a technical perspective, the $78 level has acted like a threshold that separates bullish potential above it from neutral or corrective behavior below it. Traders use levels like this to calibrate risk, especially in futures markets. The continuous silver futures contract has been trading within a defined range, and when prices break above or below these technical thresholds, it often signals a shift in trader psychology and positioning. But let's talk macro drivers, because silver doesn't move in a vacuum. Right now, one of the most significant forces impacting silver prices is the US dollar. Silver is priced in US dollars worldwide. When the dollar strengthens, often in response to strong economic data or Federal Reserve policy positioning, silver faces downward pressure because it becomes more expensive for holders of other currencies. On the flip side, dollar weakness tends to favor metals. Recent data suggests the dollar has been trading with relative strength, exerting some restraint on silver's upside. Another key macro consideration is interest rates and monetary policy expectations. Precious metals like silver and gold are sensitive to real interest rates, the difference between nominal interest rates and inflation. If real yields are rising, which happens when nominal yields are high relative to inflation, non-yielding assets like silver can struggle. If real yields fall, it tends to support metals because the opportunity cost of holding these assets decreases. In the past few sessions, as inflation expectations and economic data have held firm, markets have been cautious about expecting sharp interest rate cuts, which has limited some of silver's upside. This has a direct effect on sentiment around the $78 level. Now let's bring in supply and demand fundamentals, which are crucial for longer-term traders. Industrial demand for silver, especially from green energy sectors such as solar panel manufacturing, has remained significant. Silver plays a central role in photovoltaic cells and other clean tech applications. As demand from these sectors grows, it can exert upward pressure on spot prices, particularly if supply doesn't keep pace. On the supply side, silver is mostly produced as a byproduct of mining other base metals like copper, lead, and zinc. That means supply growth isn't always responsive to price. Mine output can lag demand. When industrial demand outpaces supply growth, it creates tight conditions that often support price floors even during market pullbacks. While supply metrics are not updated daily in live price feeds, historical patterns show these dynamics are persistent. So when we see prices lingering near the $78 mark, we have to ask, is this a temporary consolidation, or is it establishing a new trading range? Right now, short-term sentiment is mixed. Some technical analysts interpret recent consolidation below $80 as a struggling market that might drift lower if dollar strength and real yields remain elevated. Others argue that strong physical demand and evolving supply constraints could create support right in this area. Next, let's look at trader positioning and momentum signals. In futures markets, where much of silver trading volume comes from leveraged positions, price momentum can self-reinforce once key levels are breached. If silver were to close consistently above $78 on high volume, it could attract additional buying from momentum funds and short-covering traders. Conversely, failure to hold above $78 could signal a deeper retracement, potentially pulling prices back into the mid-70s or lower. This recent price action has also interacted with broader sentiment in the commodities space, especially with how traders view risk assets relative to safe havens. Silver sometimes behaves as a risk metal, meaning it can fall when equities rally and risk appetite increases. However, at the same time, silver retains some safe haven characteristics because investors flock to precious metals when macro risk rises, though gold typically leads, and silver follows with higher volatility. Another important indicator is the gold to silver ratio, a metric often watched by institutional traders. When this ratio is high, meaning gold is expensive relative to silver, silver historically has greater upside potential if conditions turn bullish. While this ratio isn't updated second by second in spot price feeds, it's a contrasting measure that adds context to why a breakout above $78 is significant, because it may signal a reversion toward historical norms. Now, let's talk about what could happen next near this critical $78 level. There are several possible scenarios. Scenario 1. Bullish breakout above $80. If silver convincingly moves above $80 with strong volume and supportive macro data, such as signs of real yield compression or a weakening dollar, then $78 could become a launchpad for the next leg higher. In that case, we could see momentum traders jump in, pushing prices further toward key resistance zones above $82–85, areas that have historically acted as psychological levels. This breakout would also indicate renewed investor confidence in silver's dual role as both an industrial and store of value asset. Scenario 2. Range continuation around $76–79. If silver continues to hover in a sideways pattern without strong directional catalysts, anchored around that $78 zone, then the market may be in a consolidation phase. Traders often see consolidation as a way for the market to gather strength before making a decisive move. In this context, $78 becomes the pivot. Price action above it favors bullish momentum. Price action below it favors bearish risk. Scenario 3. Breakdown below $75. If broader economic data surprises to the upside, strengthening the dollar further and lifting real yields, or if industrial demand proves weaker than expected, silver could break below key support levels. A break below $75 could trigger stop orders and spark a quick move toward lower intermediate supports, such as $72–70. This kind of move would likely cause increased volatility, particularly as leveraged positions unwind. Right now, given the recent trading range and macro signals, both upside and downside risks are real. The market is responding to multiple cross-currents, from rate expectations and real yields to industrial demand forecasts and technical consolidation. As traders and investors, it's important to watch live indicators to gauge which momentum is winning: dollar index movements, real interest rate changes, treasury yield shifts, volume and open interest in futures markets, price behavior around key support/resistance zones. Each of these will help confirm whether $78 is holding a support or if it's being tested before a deeper move. So what does $78 mean for traders? It's essentially acting as a sentiment fulcrum, a point where many traders decide whether trend conditions favor bullish continuation or bearish retracement. In markets like silver, which are highly sensitive and volatile, these pivot areas often define short-term positioning and long-term risk profiles. If you're actively trading, you may use $78 and other adjacent levels to set alerts, protective stop losses, or profit targets. For investors with a longer horizon, watching how silver responds to macro drivers like dollar trends and rate expectations could help time accumulation phases or manage exposure. In conclusion, silver at $78 today represents much more than a price. It's a critical crossroads where multiple market forces collide: technicals, macroeconomics, industrial demand, trader psychology, and global monetary trends. Whether silver breaks higher from here or consolidates will tell us a lot about the next phase in this market. So make sure you stay tuned, stay informed, and keep watching those key indicators closely. If you enjoyed this real-time market breakdown and want updates as these price dynamics unfold, hit subscribe, because we're tracking it as it happens. I'm Alex Morgan, and I'll see you in the next update.